Hi, this is Randy Finney with the right side of the chart, and today is Friday, November 2nd, 2012. As the markets are a little slow today, I figured I'd do this overview on the S&P 500. It's been a while since I've done a video overview on the broad market here. This video will be similar to the recent videos that I've done on the QQQ NDX, where I'll look at the indexes, do a quick overview of the index itself, and then dig into some of the top holdings. I'll try to keep this video as brief as possible. Let's start out here with the monthly chart. I've showed this chart in the past. Let me go ahead and zoom out. This is a monthly chart of the S&P going back to 1971 here, and as you can see, we're looking at the yellow lines that I'm highlighting here. This bottom yellow line and this one form an ascending or descending channel. It's early in the stages. I started highlighting this a few months back, and as you can see when we zoom in here, prices have attempted to pierce above that, but are really flirting with the top of that channel now. And again, these are monthly candlesticks, so you're not going to see day-to-day changes in these. It's just something to track going forward. I have different uptrend lines. This is the primary uptrend line, which in my belief, if we're at or in the early stages or near the early stages of a new bear market, cyclical bear market that is, then we're looking at this as a very likely target over time. That would obviously take a year or so to play out, but if prices do reverse here, that's one of the possible final targets for the move. And then I have these what I call sub uptrend lines drawn here, and we usually get these impulsive breakdowns. So this is on the monthly chart, the sub uptrend line to keep an eye on. And as we move forward here to the weekly and daily charts, you'll see that uptrend line as well on those time frames. If you'll note, this is also, as I've mentioned in the past, what looks to appear a nice double top pattern with these two successive peak highs, and this horizontal line here that I have highlighted forms pretty much the base of a double top pattern, and if that pattern were to break down, you typically take the distance from the top to the bottom of the pattern and add that on as a projected measurement. So that's a long ways down the road, folks. If we happen to get a bear market that brought us down to this level, that would be something we'd keep an eye on. We can even see the S&P push up here to make a triple top if we see prices go, and it's not too much further up until this level, so we might be looking at a triple top pattern. However, if you note down here on the double top highs, we had some significant monthly divergences put in place, and yes, we did have the vicious bear market of 07 to 09 here. That may have been all that needed to play out from these divergences, but it's quite possible we'll see some more. So let's go ahead and take a look at the weekly chart. Okay, this is a weekly time frame. The yellow lines here, this is the key pattern we're watching on the weekly time frame, bounded by these yellow lines. This sort of a bullish rising wedge type pattern here, and a break below this yellow trend line would more than likely officially kick off a new confirmed downtrend, at least as viewed on the weekly charts here. Just like the monthly charts, positive divergence in place, solid divergences, both on the MACD, RSI, just about any indicators you put up here, volume, divergences on the volume, all looking at from this peak to this peak. And as I mentioned quite a bit recently, we had a wedge overthrow on the S&P 500, as we did on a lot of stocks, and prices have come back in that wedge, so we're looking for a breakout down below. And of course there's a lot of resistance to come back on. We did have the confirmed bull trap where prices broke out above this previous price high, have come back below that level. That would be this horizontal line here. So we did have a confirmed bull trap there, but we still have some support coming down. We look at this downtrend line. Prices are close to nearly back testing this downtrend line that's highlighted, which will come in right around where this uptrend line comes in. So that's a key support level right there. And that's why, in my opinion, if that level goes, both this downtrend line and this uptrend line, that will more than likely bring prices in relatively quick order down to this support level here on the weekly chart. Zooming in at the daily time frames, very similar to the SPY chart that I've been posting lately. We've had prices come back down. This is a key resistance level that I'm looking at here. This zone, prices so far tried to penetrate above that zone and have failed. Let's see where they go. So this much prefer to see prices stay within this area here to keep the bearish scenario alive. But as I mentioned in some of the posts today, the QQQs, which have led this move on the downside, do have some considerable upside left if the market does want to push higher. So it would not completely surprise me if the SPY were to get a little bit higher than where we went today. But again, my preference would be to see prices turn down from these levels. Once again, to keep the bearish scenario intact. And this is the SPY daily chart where I have the targets. I typically prefer to use the SPY for listing the targets and as a trading vehicle. So you can see here prices have so far failed at the top of this resistance zone, but more than likely we'll have to wait until next week to see how this resolves, how it plays out, if we're going to punch up higher or turn back down. My preference still, my primary scenario is that we will turn down here soon. First target, second target, third target, etc. Okay, now let's dig into the components. We're going to start out with XOM. XOM is the big dog of the S&P 500. Again, the S&P 500 is more it's not the largest components are not as top heavy as the NDX, and of course there are 500 stocks as well in the S&P 500, but with that being said, XOM is the largest component of the index, so that is one that we always keep an eye on. And here's what we're looking at on the daily time frame. Please pardon these charts, I have not cleaned these up. I was usually in advance of these videos I'll go in and clean the charts up. I haven't posted XOM in a while. I have a lot of old trend lines. These were old targets from the last short trade that we put on over here. Hit T1, hit T2, went down a little bit more, so disregard those targets. This is an uptrend line that I've been watching, which we've recently broken below. That puts XOM overall bearish, in my opinion. The fact that it did punch out to new highs. Again, I've talked a lot about that recently. A lot of bull traps in place. A lot of stocks broke out to all-time highs or at least multi-year highs and have since failed. XOM has not failed that high. That would be this level here. But we did break below this trend line. Had some impulsive selling. What looks to be a natural, counterbalance here within maybe a larger downtrend. I'll talk a little bit more on this chart. In fact, let's zoom out to a 2-day period, and you can see, look how many attempts here. 1, 2, 3, several here. Quite a few attempts. So this was a very, very key resistance level for XOM to break out to new highs, which it did. So far we have this trend line break, which in itself is bearish, but yet overall bullish picture because we are at, XOM has recently broken out to new highs and has still held those levels. A move back below this line here, let's see, that is roughly the 88.25, we'll call it the 88 level. That would be very bearish in my opinion on XOM. Haven't added it here. Let's stretch this trend line. If you look here, we do have negative divergence in place on these highs. Another bearish, potentially bearish sign here for XOM. Divergence against, the recent highs. Negative divergence on the MACD. Let's take a look at the weekly chart. Divergence as well on the weekly chart. I believe that might be the same time period we're looking at there. So either way, solid divergences both on the MACD and the RSI. We're looking at a weekly chart on XOM here, and yet XOM is still shy of its all-time highs. It has broken out recently to new multi-year highs when it took out these levels, but if you look back here from the 2007, 2008, we're still sitting just below the all-time highs. So overall, one to keep an eye on. Monthly chart. I'm not going to go over all the time frames on all these charts, or all these components, but I did want to look at the monthly. This is something I've been tracking for a long time on ExxonMobil. Goes back This chart goes back to 84, and it looks like a pretty clean ascending channel, which price has made a solid break below back in the 2010 here. Looks like May 2010. Shot back up within the channel, but since then we've been struggling with the bottom, along the bottom of that channel. I do have two parallel trend lines that mark the bottom of that channel. It just has to do with certain candlestick wicks or bodies. Sometimes I'll draw sort of a channel zone, if you will, or a support zone, and we've been teeter-tottering within that zone here, looking at making a double top pattern. And again, what makes me think this stock overall, this is a bearish chart. I put a lot of stock into these divergences, which more often than not play out. We're looking at a monthly chart here, so you don't expect these divergences to play out overnight. But again, I've been focusing on different time frames here on ExxonMobil as well as the S&P, and most of these negative divergences go all the way down into the daily time frames as well. So either way, overall, I just don't see this stock breaking out to new highs and taking off with these divergences in place, although anything is possible. We'll just have to watch it. Next up is Apple. I won't spend too much time on Apple because I've covered it nearly ad nauseum lately in the QQQ NDX videos, as well as a lot of static charts. Apple is an active short on the site and has been up from around the top of this wedge. And as I've made clear all along, I firmly believe this to be at least the first target on Apple. First target is either the first of this horizontal uptrend line, this blue uptrend line here, or this horizontal resistance level. Hard to say. We don't know yet which one will get there. My guess is we'll probably see prices come to this uptrend line first. And depending on where we go from there, we'll just have to take a look at how the markets look overall, how the charts on Apple look. I very well may extend T2 as my preferred target. At this time, my preferred target is only T1. So let's see what happens here with Apple. Quick look at the weekly chart. I haven't discussed this a whole lot in the blog, but we do also have solid negative divergences in place, and that's just something we don't see very often in Apple. We had almost some divergences here. We had lower peaks in the MACD and the RSI, although prices didn't actually make a higher high here. They were about equal, and that was just before the bear market back in 07, 08 really sent prices down. It also, you can see how clean and well defined these trend lines are. So again, what we're looking at, a very, very similar price action to Apple. We've stayed above this long-term uptrend line since the bear market lows. And for the first time since, we have some very, very solid divergences in place, some impulsive selling off the top of that sort of wedge pattern. And again, I think it's a matter of time. I do feel highly confident that over the next coming months, Apple will see this, at least this target, this first target on the weekly chart, which is about, might not have it exactly on here, we'll call it 365, somewhere in there. Here's Microsoft, about the third largest holding, I believe, in the S&P. And I covered this chart quite a bit in the recent QQQ NDX videos. I don't see a lot on the daily chart right now, so we're looking at the weekly chart. When I first started posting this, all these notes were on there. You can pause this video if you haven't seen this chart and read those notes. But I last posted when Microsoft was up at this level, and I pointed out how it would most likely have a reaction, pull back off this level, which it has. So again, Microsoft at this point, especially if you take a look at this line that I'm highlighting here, this upsloping line that goes from these previous highs to the most recent high, against this line on the MACD as well as the RSI, solid negative divergences put in place up to this point here. If you follow the vertical line, and in my opinion, the selling that we've seen so far is really not in line with what I would expect on such negative divergences put in place here. So I do, over the next coming months and weeks, expect more downside in Microsoft. Procter & Gamble, one of the bluest of blue chips. Here's what we're looking at. Recently broke out to new highs like so many other things. Came back, retested that level, briefly broke below it, has come back up. You see the sharp uptrend line, prices broke below. Let's take a look. We're looking at a daily chart here, by the way. Here's a little bit longer, zooming out to a 2-day period that goes back a few more years. Procter & Gamble has, this going back to 2009, just a tremendous tight range of consolidation, and prices recently broke above that level, which in itself is bullish. Cannot argue that. However, we do need to keep an eye on Procter & Gamble, because if it fell back below this level, the recent breakouts, that would be very bearish in my opinion, because that would be quite the bull trap. Let's look at a monthly chart on Procter & Gamble. This one I've been following for, over a year now. Again, we're looking at a long-term trend line that goes all the way back to 1984. And this is clearly just one big giant rising wedge pattern. The trend line is very well defined. 1, 2, 3, 4, 5 touches. Prices recently started breaking below. The stock is trying to cling to that trend line. We had very significant monthly divergences put in place on that pattern. Looks like a giant rising wedge pattern, again from the previous reaction highs all the way back in 2000 to the highs that were put in the 2007 stock market highs. We had negative divergence in place below on the MACD, as well as the RSI and a lot of other indicators. I haven't marked it here on the RSI. And those divergences, they did play out to bring prices back down to the bottom of the wedge, but overall, I think it's only a matter of time before this pattern goes. Here are some longer term targets for Procter & Gamble. J&J, I don't see really much on the chart here. Let's take a look. There's a monthly chart, not a whole lot. I don't have much of an opinion on that one. IBM, I have a couple trend lines here, which IBM has broken below, looking a little bearish. And let's take a look at a weekly chart. Here we go. Looks like a nice, pretty well defined uptrend line, wedge type pattern, negative divergences in place at the highs on this pattern. We had prices broke down here. Let's check the date. That was back a few months ago, about 5-6 months ago, and have since retested that wedge or the primary uptrend line from below, and we had some impulsive selling right here a few weeks back. So to me that looks like a bearish pattern breakdown, retest, and if you look at the volume at price histogram over here, it looks pretty thin. So this line I'm highlighting here that's the we'll call it the 175-ish area. If and when prices break below that, I would expect this thin zone to be filled relatively quickly. And by relatively, we're looking at a weekly chart here, so we're talking weeks or months, and that's quite the quite the price target. We're talking the low 130s on IBM over time. If this bear market, if indeed we are about to embark on a bear market or have already started on one, that's where I would see IBM going more than likely before all is said and done. Of course, here's an intermediate target, and again, we can only assess these things as they go, so I can't say with any high degree of confidence right now if that's where prices are going. But we take it step by step. We take a look at the charts when we get to this level, if we get there. If we break below that, we do the same when we get down to this next support level. GE, not too much of an opinion here. Looks like prices broke down here. This is where I believe GE is probably going to go to, at least in the near term, over the next few weeks or months, that level 2040-ish. And let's look at a monthly chart on GE. GE took it on the chin during the financial crisis, because they do a lot of lending and finance and things like that. Longer term chart not looking so hot, but we'll just have to watch. I don't have much of an opinion on GE. JP Morgan, king of the financials, looks like a pretty clear uptrend line here, which recently broke down. Prices have pushed back up. Again, we're looking at a daily chart here, and have come close. They have not yet retested, but that's what we're looking at on a daily time frame. Weekly chart, the pattern, it looks like a large megaphone type pattern set up on JP Morgan, similar to what's set up during the or just before the meltdown in 2007, 2008. Monthly chart, we have this pretty well defined downtrend line. Prices are getting close, but a little ways to go there. So overall, more bearish at this point than I am bullish, but I've left the financials alone. I haven't had any of the bank stocks on as shorts lately or longs. I just don't have a strong opinion on these right now. BAC, Bank of America, daily chart, looks like we've had a breakout. We had this downtrend here that I have drawn. Prices did break above there recently, which is bullish. It also right before it broke there, but it broke below this uptrend line here. I should extend that, and now we've shot through it just a little bit. One to keep an eye on. If it fails here, then it will have come back under this trend line, and this will just be nothing but a slightly overshoot on a retest. So sort of a mixed picture on this one. Again, I'm staying away from the bank stocks right now. Here's a weekly chart. Similar patterns to JP Morgan, and right before the end, or right before the financial crisis started, we had this, downsloping megaphone pattern. Prices did pierce through the upside to give a nice bull trap, nice fake out move there. Again, if you'll zoom in a little bit, you can see that, and that seems to be what we've done here. So again, something to watch in the coming weeks to months here. If Bank of America continue to power on higher, that's bullish. If it falls back below this pattern, I wouldn't be surprised to see something similar to this. Okay, I'm getting a little longer than I wanted to in this video, so I'll only cover a few more stocks, the ones that I do see something on the charts. I'm not going to go through all 25 at this point. Here's AT&T. This is a daily time frame. Nice defined ascending channel, which we broke down from. I mean, this is the beauty of technical analysis. You can just see how impulsive that selling was right down to this support level. I don't recall. I don't believe I've had this as a trade idea on the site. I have been following this stock, but I don't think I caught that breakdown early enough. And we overshot that support level. That looks like a little mini crash in the stock. I don't think that was, I don't know how long prices traded down that level below there, but we're above that support level now. It is very thin between here, and I do expect AT&T, before all is said and done, in this bounce, once this bounce runs its course, we'll probably see AT&T down around this level, 30, call it 32, somewhere around there. Weekly chart, nothing there. Monthly chart. Here we go back to, again, 1984, very long-term uptrend line. Focus on the uptrend line that I'm highlighting here. Prices broke below back in the bear market back in 09. 08, 09, broke below, came back, and look at that perfect retest recently. We finally retested that line from below, and if you can see here, I'll zoom in a bit. Look at that impulsive selling off that level. Now we also have this downtrend line as well. So there's a lot of mixed pictures in the market right now, folks. For those bullish, and seeing green skies ahead, you can look at these as bullish breakouts. Here's a nice downtrend line coming all the way back from 2000, and that downtrend line was recently broken out. A very impulsive. Look at the big green candlestick. I'm trying to hold this on right there, right here. And prices have come back to retest that trend line, which is bullish. So we have a breakout and a retest, and a breakdown and a retest. So go figure. Glass half empty, glass half full. That's up to you. I think you all by now know my overall bias, but again, we'll have to adjust and adapt in the upcoming months here, depending on where the stocks like this go. CVX, Chevron, another big holding in the S&P 500. Recently broke out to new highs here, so a bullish breakout there, taking out this level. Go back, look at a 2-day, similar to ExxonMobil. However, we have fallen back below that level. If you look here, prices have come back down now. I'd like to see them, as far as the bearish case goes, I'd like to see prices break below this 200 EMA here. But as of now, it looks like we have a bull trap in the early stages. Again, I'd like to see prices get a little bit lower. Excuse me. We also had this breakdown from this very clean ascending channel breakdown there as well. That in itself is bearish. Take a look at the weekly chart. These purple lines, you look at this large wedge type pattern with a wedge overshoot that we had right here, and prices have fallen back into the wedge. And as I often state, It's been my experience that more often than not, when we have these wedge overthrows, prices quickly come back in the wedge and then break down to the other side. Very solid negative divergences in place on that wedge. So overall, that's about as bearish a chart gets, in my opinion, especially if we have any more downside to confirm that recent bull trap on the failed breakout to new highs. Now we're looking at a monthly chart here. Here's a long-term trend line going back to 1984. Prices are at the top of this wedge right now with negative divergences in place even on the monthly time frames here. So pretty much across the board divergences on Chevron. And my guess is that before all is said and done in the next year or so, this stock's going to give up about 50%. It's about a $109 stock now, and I see it going down to the 67 or so level before all is said and done. Here's Berkshire on a daily time frame. Here we had this recent uptrend line break, pull back, prices hit support and bounce back and have retested that level. So I don't have this as an active trade on the site, but I think the stock could be shorted here. I would expect this support level to go, and eventually prices come down to this level here. Cisco, this one was covered in the QQQNDX video. We've hit this target. I think if you reference those videos, I probably had these support lines on there, support and resistance lines. Prices did pull back, hit this level, and have now bounced back to that former support level, which is now resistance. So, and that's a pretty solid level. If you look at these big gaps in here and these reactions, that's one to watch. If Cisco manages to take this out and can power up, that would be bullish, obviously, but my expectation is the stock will probably turn down here soon. That's a daily time frame. Here's a weekly on Cisco. I mentioned this potential very large head and shoulders pattern setting up. This would be the neckline here, and this is a monthly view on Cisco. Coca-Cola, symbol KO. I've been meaning to add this one. I don't think I've put it on the site yet as an active trade, although I've been following it for a while now. We have a couple things going on here, but most importantly is this trend line here, which possibly be a neckline, an upsloping neckline on the head and shoulders with a right shoulder or left shoulder here, head, right shoulder, and either way it is a valid trend line. And prices have broken below that and have now retested. So I think KO is an excellent short around these levels. I'll try to put up a static chart on the site. If you look at the highs here, look at the purple line, if you will, and look at the divergence. Look how strong this successive high was over this one against a declining MACD and RSI. So very solid negative divergences put in place at the top, at the highs here on Coke. And let's take a look. 2-day chart. So let's go to weekly here. Okay, a weekly shows a little bit better. This well-defined uptrend line off the 2009 lows. So these are the entire bull market run in Coke has been defined by this uptrend line. Lots of touches on that level, and as you can see here, I'll zoom in a bit. Prices recently broke down below that level. So, and this would be the first support level. And this is a monthly view on Coke, KO, and we're getting close, a little shy of challenging the all-time highs on the stock, as you can see from back here and all the way back in 1998. This is Pfizer, PFE, another case of glass half empty or glass half full, depending on how you want to look at it. I almost added this one on the site as a setup, a short setup recently when I added Merck. I went through the sector, and charts are very similar. Shorted Merck on the wedge overthrow recently, and that one's, I think we'll get to that in a second here. I'm almost wrapped up with this video, folks. But we had the very clean rising wedge pattern as defined by these two uptrend lines. This is a daily chart. Like so many other stocks, including the indices, a nice wedge overshoot. Prices impulsively came back down within that wedge, and I would expect that wedge to break down. If you look down below, we had some clean divergences in place on Pfizer. So that's the bearish take. And now if we look at a longer term chart, this is a monthly chart. Here's a long-term uptrend line on Pfizer, and this was a long-term downtrend line, pretty well defined, as you can see here, which prices recently broke above. So that in itself is a bullish event. So how far Pfizer comes back, I don't know. I would, put it as a short on the daily time frames. Here are some levels to look at, but at this point, I'm not going to add that as an official trade. If you like the sector and you want to short it, take a look at these charts. If you have any questions, want those exact levels, shoot me an email and I'll get back to you. Okay, here's Google. This one's interesting. We had a powerful breakout earlier this year, just a few months back. An incredible rip from Google. Look at this uptrend. Relentless uptrend. Once that trend line broke, that's all she wrote. The quicker a stock goes up, the harder they fall. And as you can see, that happened with Google. This was just a incredible momentum run. Prices broke, fell down hard. Of course, a lot that was earnings induced. But as I always say, the earnings are usually priced in the charts. Yes, we get these large gaps one way or another, but typically when you have a bearish chart in play, the earnings more often than not will follow to the downside as far as where expectations were. So either way, from a technical perspective, Google is now retesting this trend line that it broke out of recently. We're right at that level now. So although I'm not recommending or adding it as a short, one could take a shot at it here, I think, with a stop not too far above this line. Let's look at a 2-day period to zoom out a little bit. This is that same trend line. So you can see where Google is right now. Weekly chart, again, Google was covered in the NDX video. This was a breakout to new all-time highs, and I discussed this chart in detail. I can't recall if I did it in static or in the video or both, but I pointed out the similarities on that rip leading up to the last bull market highs in 2007. What I referred to as a buying climax, very similar to the buying climax that we had now. And buying climaxes usually put in lasting tops, so it would not surprise me in the least if Google followed a similar pattern from here over the next coming months and weeks, as well as look at from this trend line here, these peaks, solid negative divergences in place like everything else. And again, we're looking at a weekly chart, so these divergences like this typically don't play out for only a 5 to 10% correction. We're talking a much longer lasting trend reversal and much larger, deeper corrections, and it would not surprise me in the least to see Google at the very least come down to this primary long-term uptrend line since its inception. This was I believe the IPO date back here. And that would be one target, this uptrend line, and it would not surprise me to see Google break below that level as well. Intel, this is a recent long trade on the idea, a long-term trade idea. As I've been stating for weeks, it's my favorite of the NDX. I've been overall very bearish on the QQQ's NDX, but this Intel seemed to have started its correction earlier, and where I added it on as a longer-term trade idea, trader investment idea, was on the retest of this long-term downtrend line. As you can see here, 1, 2, 3, 4, and so 4 points, 4 touches going all the way back to 2003, and prices fell back and did find support so far at that trend line. Now, on the flip side, like so many charts, we also recently had a bearish breakdown of this. This is the bull market uptrend line since the March 2009 lows. So we had there's the bull market uptrend. Prices broke below. So, like many other stocks right now, we're at a critical juncture, crossroads, if you will, and where Intel and a lot of these other key stocks go from here should very likely be telling where the market's going to go over the next year or so. Finally, Merck. This is an active trade on the site, so there's quite a few static charts. We shorted this one on the wedge overthrow, or at the top of the wedge. I think it was just at the top of the wedge right before the overthrow. Prices have since, just as expected, come down very impulsively back into the wedge, broke below it, and are now retesting from below. I highly favor at least T1, this T1 zone, in the upcoming weeks or months here, and more than likely, I believe T2 is listed as my preferred target. If prices do break below this T1 zone, you can see how thin it is here. All we had is this quick rip up, and the volume at price histogram is very thin right here. So I do expect a reaction at this T1 zone level somewhere in here, bounce or prices to maybe consolidate for a little bit, but if and when they do break below that level, I'd say the odds are pretty good of T2 being hit. Again, negative divergences were put in place there. Let's see anything on the weekly chart. Yeah, like so many things in the glass half full, half empty, we do have Merck recently breaking above this multi-year downtrend line. I'm viewing it here on a monthly chart. This is a big downtrending channel, and prices recently pierced above there, but we're right on the line now. And again, this is a monthly chart, and like all trend lines, you have to give a little margin of error. You can have prices spike above it temporarily, even close for a month or so and come back in. So trading these longer term time frames, you just have to give it room and really focus in on the weekly and daily charts to hone in on your exits. Here's a weekly chart showing that same downtrend line. Actually, I probably should lift it up just a hair, and this would be the first cue to maybe add on to a Merck short if prices did make a solid move back below that downtrend line on the weekly time frame. HPQ, this chart looks like death. It looks like a little bear flag. I had put this here a few weeks ago. I haven't posted this on the site, but there's a nice pole, bear flag, and if that plays out, you just add the measurement from the pole right here. This whole area from about this point, you add that to where it broke down, and that would be the technical projection of where HPQ is going. Walmart, an active trade on the site, one that I really like. I've continue to give this one a little room. We shorted it back here, recently took out the highs, but as I stated, I was giving my position room, which I have, and I don't think I posted this pattern. I drew it a week or two ago. Here's another trend line, uptrend line that was broken down recently, and so now the bull trap is solidly confirmed on this one. We did have this bullish breakout to new highs, and look how impulsive that selling is and how far below prices are, over that key breakout level. So I think over time Walmart's going quite a bit lower. There's a monthly chart there. Targets, I have the targets listed on the site. For some reason they're not on this chart. Citigroup looks like a very nice uptrend line here, which prices are quite extended, very overbought on the daily, just about all time frames, and we're coming up to this significant level here. We have this prior reaction high. With as overextended as prices are, I would be very surprised to see Citi just keep on going up through there. Even if it does break below, I would put the odds very highly that any breakout above this level will not be very long lasting and will more than likely only serve to be a bull trap and break below this line. So I would not be chasing Citi at this level. Oracle, I've showed on the NDX QQQ videos a series of uptrend lines. The most recent one broken down, and as again you look at the past history on these trend line breaks, and the retracements have been almost the entire move up. So I think this one has a lot more downside to go over time. That's Oracle. And finally, Philip Morris. This one I don't believe I've added it on yet. I have targets listed. It may or may not be on the site. I'll have to check. But looks like a very nice wedge pattern here. Breakdown at this point here. We came down to hit this support level, bounced back up, retested again, and prices have moved back down. So this horizontal line is a key support level, and once that level goes, if you can look over here on the histogram, very thin between this support level and the first target. So I would consider a short on Philip Morris on any move below the call it the $86 level, somewhere around there. Okay, folks, that's it. This one went longer than I thought, but I hope you found it interesting. This has been Randy Finney with the Right Side of the Chart. Have a good day.